Dumelang, welcome back to my channel. If you're Sabi, welcome back homie. If you're new to this channel, click that subscribe button. Okay, you'll never regret it. Guys, welcome to the money chat segment of this channel. By the way, if you're only subscribed on this channel for this segment in particular, you can time it for the end of the month or the first week of the next month. Okay, so somewhere around there, month end nyana, that's where you get it. You're very much welcome. So today I just want to talk about what rights offers or rights issues are. And if you follow this channel, you know that this is a bit more advanced from what I usually post on the money chat segment, and that's because if our local news media reports are anything to go by, then it is very clear that the South African market still needs to be taught the basics, still needs to be taught how to live within their means, to budget, to save, the simple things, because we're apparently heavily indebted and not even good debts, right? So our financial circumstance is dire. It's a dire situation. Okay, so when I post or when I create content for this segment in particular, I mostly bear that in mind, right? And so I produce content to address that general situation. But today I just wanted to talk about this because if you are glued up on current affairs, or in this case more appropriately urgent affairs, if you own Purple Group shares, this will be helpful to you. Purple Group is or they call themselves a financial services and technology group that is incorporated in South Africa, and they own Easy Equities. Easy Equities is, if I can put it loosely, it's a Robin Hood equivalent of South Africa, all right, where people are able to buy fractional shares for listed companies. So what Purple Group announced a couple of weeks ago, they announced that they are offering a rights offer by increasing their portfolio by about 10% or more, accurately about 9.25%. And what I've seen on the socials is that a lot of people don't actually know what that is. A lot of people don't know a lot of stock market jargon, right? So I just wanted to build on the understanding of what this is so that anyone who's still not very sure about what's going on there can get a bit of an understanding and how to move forward with regards to your own Purple Group shares. But this information will also be useful even for future reference when other companies that you may be invested in decide to do rights offers, right? So the thing with the Purple Group stock is that it grew to fame during lockdown. A lot of influencers were hyping it up a lot, so a lot of people bought without looking at financial statements, without looking at price earnings ratios, without looking at debt to equity ratios, none of that, no technical analysis, no analysis at all. We just bought, right? Which is not entirely bad in my opinion, but here we are now. Our favorite our darling stock has announced that they are doing a rights offer, and I see that a lot of people don't actually know what it is or have a good grasp of what it actually is. So that's what I want to build onto, right? So a rights offer is an invitation by a company, a publicly listed company usually, to its current shareholders to buy additional shares at a discounted price from what is available to the general public on the market, right? And this is often done for a short period of time, and it is often underwritten by an investment bank. So the role of an underwriter is to assure the company that they will avail the funds that the company needs, maybe through buying the shares that the company was not able to sell during the rights offer period. So in the case of Purple Group, they announced that they will be growing their share portfolio by about 10%, and they are availing their shares at a price of 81 cents per share for current shareholders. So for every 100 of Purple Group shares that you earn, Purple Group is offering 10.2 and some more decimals, right, to you, which you can then transfer into ordinary shares by paying 81 cents for each of those rights to turn them into ordinary shares. So that's what they're offering. So often the reason why a company would choose to undertake a rights issue or rights offer is to try and get or urgently get a cash injection for an ailing balance sheet, or it could be to raise funds to pay down debt if they are no longer able to access more debt through like loans from banks. But other reasons could also be more on the positive side, which could be to raise funds to expand the business offering. In the case of Purple Group, they or their claim is that they're doing this rights offer so that they can raise about 105 million rand for local and international endeavors that they want to finance. Let me actually quote them. They say that they want to raise that much to pursue local and international expansion opportunities through acquisitions and the development of strategic projects that will enhance shareholder value and client experience. So this is the reason they are putting forward for undertaking their rights offer, right? And the former, if there's an ailing balance sheet, before you commit to putting more of your hard-earned money into buying more stocks or more shares into the company, you want to rethink that, because you need to question why there's an ailing balance sheet in the first place, whether you can trust the leadership of the company to use the cash or to use the capital that they're going to get from the rights offer for the right reasons, if they were able to let the company to an ailing balance sheet in the first place, right? But for the latter reason, which is maybe for business expansion, you would think that this is something that could lead to more value for the shareholder, because it means business growth, which is potential to be more profitable, which at the end will benefit the shareholder, right? So that's a consideration to make. So what a rights offer often does is to cause a dilution or value dilution, because if a company increases their shareholding, then there will be a larger pool of shareholders to share the company's net profit. So that is what the value dilution will be. So the value of each of your shares will be less after the rights issue period than it would be before. And the underwriter for Purple Group's rights offer right now is Sanlam Investment Holdings, which, if I'm not mistaken, already own a 30% stake in the business. So they are the underwriter that is giving assurance now to Purple Group to say that for the shares or the rights that they do not manage to convert into shares by getting the shareholders to pay more into their portfolio, they will avail the funds that Purple Group needs in order to undertake or pursue the things that they want to pursue, which they say is local and international endeavors, with more acquisitions and whatever. So in a rights offer, you have three options as a shareholder. You have the option to take it up in full, to take all the rights that you've been given in full and commit to buying or to converting them into shares by injecting more of your money, or you can choose to ignore, or you can choose to sell your rights that you've been given by the company to other shareholders who are willing to buy in excess of what they've been allocated. So that third option, those are called renounceable shares, which I heard it's not always that a company allows you to sell your shares, but in this case Purple Group is allowing people to sell their rights to other shareholders, and so those are called renounceable shares or renounceable rights, right? So if you choose to take up your rights offer in full, let's look at an example of how you will be affected by the dilution that I already explained that rights offers Cause let's say that you have 1,000 shares right now in Purple Group, and you choose to take up the offer, or you choose to participate in the rights offer. What will happen is Purple Group would have already allocated to you in your portfolio. It will be called Purple Group LOA, which is Purple Group letters of allocation. So if you currently own, let's say, 1,000 shares in Purple Group, what they will do is they'll give you about 10%, which is about 100 rights. They'll give you 100 rights, which you'll find in the Purple Group letters of allocation on your portfolio. And for each of those rights, for you to be able to convert them into ordinary shares, you need to pay 81 cents for each. So if there's 100 of them, then you'll need to pay 81 Rand for you to convert your rights into ordinary shares. And the estimation of your shareholding, or your shareholding value after the rights offer, is difficult to estimate because unfortunately it is affected a lot by market perception and business factors, in which case in South Africa there's a lot going on right now, with interest rates going up. Just the financial climate in South Africa is very volatile right now. So those are the kinds of things that can affect the value of the shares after the rights offers. But there is a theoretical way to estimate how much the shares could be after the rights offer. And that's to take your number of shares. In this case, you have 1,000 shares. And let's say one Purple Group share at the moment is 1 Rand. It's actually 1 Rand 3 cents at the time of recording, but let's just work with 1 Rand. So let's say that it's 1 Rand, and you have been allocated 100 rights which you want to convert into ordinary shares. So the X rights price, which is the price of each share of the company after the rights period has passed, could be you take the total amount that you have paid for your shares, which will be 1,000 times 1 Rand, plus the 81 Rand to convert your 100 shares into your 100 rights into ordinary shares, and then you divide that by the total number of your shareholding. In this case, this will be your initial 1,000 shares plus the 100 rights that you have now converted into shares, and that amount will be the theoretical way to estimate how much the X rights price of each Purple Group share on the market will be. And I did make a calculation here. So in this case, that will be 1,081 Rand divided by 1,100 shares. That will be around 98 cents per share. So that's the theoretical way of estimating how much the X rights price for Purple Group shares could be, but that's, like I said, that's not a sure way to tell exactly how it will be because it's also affected by business factors and market perception. So the other option that you have as a shareholder is to ignore the shares, which is not a smart thing to do because you will still be affected by the dilution and your shareholding value will still decrease even if you choose to ignore. The third option that you have as a shareholder is to sell your rights to other shareholders who are willing to pay more than they are already allocated in their portfolio. So I know that Purple Group is allowing this, and they are saying that the earlier you choose to reject the rights offer, then the better your chances to be to get buyers, because then their traders will sell your rights for you at no guarantee, of course. So how you can estimate the amount of money you can get for your shares if you choose to reject the rights offer is to take the X rights price that we just calculated, which is 98 cents, minus the rights offer price, which is 81 cents per share, and that is about 17 cents. So if you sell your rights, you would sell your rights for 17 cents per right to other shareholders. So if you have 1,000 shares at the moment and you're given 100 rights for it, then you'll sell your 100 rights for 17 cents each, which will then give you what, 17 rand. So then you can get the 17 rand and cash it out. So this is how usually rights offers work. I really hope that I managed to explain it in simple terms. I hope that you got it and you'll be able to make a decision on what to do. I think that this Purple Group rights offer is not very extreme because it's just an increase of 10%. Like we saw, if you have 1,000 shares, you would only need, if you choose to participate in the rights offer, you would only need to pay 81 rand more, which I think is not much. Sometimes when companies do rights offers, it's because situations are pretty dire and you would need to fork out probably a whole lot more to participate in rights offers, right? So this one is just a good case study now because it's what's happening in current affairs. But should this happen in future with other companies, it will be worth more thought before you decide to participate in the rights offer. By the way, my husband and I will be participating in the rights offer. We just feel like it's not a lot. But I'm not trying to sway your decision. I'm not swaying your decision. Do think objectively about whether you want to put more of your money into this company or not. And last thoughts, some of the things that you might want to think about if you're clued up on current affairs, which you should be if you're participating in the stock market, okay, are some considerations. Like, for example, you would know that the Purple Group CEO or founder of Equities has come under scrutiny in recent months by industry peers, one of them being the CEO and founder of an asset management company here in South Africa. What the guy was saying, or what the industry peers are saying, is that the CEO speaks overly positively about Purple Group while being a net seller himself of Purple Group shares. So he himself is not investing in the company, but he's speaking positively about the company. But the CEO did clap back. He made an attempt to address that by saying that he only sold, he was selling so that he can exercise his options, which are given to the board of directors of Purple Group, to buy the Purple Group shares for less, which is around, I think it's between, to buy them for 35 cents to 75 cents per share, you know. So it's up to you to decide whether you feel like you buy his story, if you feel like the 81 cents that they're offering per share is fair, you know, just to exercise those things. Like I said, I just think that this one is small, like it's a small cost to the shareholder if you are already invested and you would love to see the company grow. But these are some of the things you'd want to think about in cases where the rights offers require you to fork out a huge amount from your pocket to invest some more into the company, right? So you want to look at the CEO behavior, the general leadership behavior, the board of directors, if they're people that can be trusted for people to continually invest in the company. While we're talking about Purple Group as an example, another thing that you might want to consider is that in the past financial year, Purple Group has gone from a profit of 17 million rand in the prior year financial year end in their statements, to the most recent financial statement showing that they have gone to a net loss of 10 million rand. So you want to look into some of these things. You also want to look at their OPEX, or operating expenditure, has increased by a significant amount. If I'm not mistaken, I think it has gone from 60 or 70 million to 120 million. So you want to look into those things to say, what happened? Is it because they are expanding? I mean, during the recent lockdowns that we've had, the Purple Group customer base has grown fivefold, if I'm not mistaken. So you might consider that the operating expenditure or the OPEX has gone up because of the additional administration cost for handling that increased client base. Or it could be that you have a board of directors or CEO that lacks integrity, that is going on lavish holidays while charging that on the business under operating expenses. And this is not a foreign practice. I'm not saying that the CEO of Purple Group is doing that, right? But I'm saying these are things to consider, to say, why was there such a significant jump in operating expenses? Why was there a movement from net profit to a net loss? Often for a company that is growing, the reason is often that expansion, that the company is using all their capital into expanding the business. So these are things to consider. Guys, with that said, I think that I will close this video here. I hope that this has been a very useful video. I hope that this has been useful content for you, and I hope that it has sparked the want or need to know more about these things, to learn more about these things, especially if you're invested in the stock market, to learn some stock market jargon, and to know what to think or what to consider in future if another company decides to undertake a rights offer, right? I hope that this has been valuable content for you. Please let me know in the comment section or what you think. Let me know if you knew what a rights offer is before Purple Group announced that they're going to do it. Let me know if you are interested in knowing about some stock market jargon. Let me know if you're into investing at all, or if you're invested in the stock market. Just any comment I would appreciate. Please like the video. Please subscribe if you're still not subscribed this whole time. It is free. It costs nothing on you, okay? And I'm just a lovely girl. I'm a lovely girl. I deserve your subscription, okay? Guys, I'll see you in the next video. Bye.